Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
So I'm like sitting here like, wait, why hasn't it started yet? Well, I clicked I clicked the button to start the stream, but not the one to like run the stinger. So sorry about that. So I sat there for like a minute like, all right, guys. Well, let's come into the chart to see where we're at. We have had a little bit of a down move here, starting things out. Let's see here. I don't think we had any serious news today, did we? Okay, well, anyways, treasuries are on the down foot at the moment, kind of clawing back some of that movement from yesterday, but I would say that we're still up. Like, mostly it was this big down move here. I don't even remember what the news was now. It was like a PMI or something, right? I felt like that the reaction to that was too strong. And I would still like to see us recover this, but this range seems okay. Higher end of the range, okay. S&P 500, still looking good. But, like, keep in mind, we're only like 3 sessions removed from this downside action. And I think that the concerns that were driving this downside action were very much legitimate concerns. So I'm not convinced that that's completely over. All right. Oil, well, oil took a big jump yesterday. They're clawing that back. Gold and silver seem to be holding the most recent gains from the weekend pretty decently. Copper's jumping this morning. That's interesting. And the Japanese yen, well, man, so, I thought the Japanese yen was going to be okay, but they seem to be dipping to new lows. So I think we got to keep an eye on that one because I'm not really hearing a lot about it, but it seems to me that new lows for the yen would be a big problem. Do you think that people doubled down on their basis trades and their carry trades? Because it just seems like new lows in the Japanese yen would be a bigger deal. Oh, hey, you know what? I also should look at Bitcoin. Oh, okay. A little bit of a jump. They took a bit of a hit yesterday, but it ended up being not too big of a deal. So you always got to keep an eye on Bitcoin, man, because when it starts going, it just goes, Okay, let's see here. I think that my indicator pooped out today. Wait, what? No, that can't be right. That can't be right. Well, that's very interesting. Okay, so I don't know why it's not drawing. But I think we're getting corrupted data here. Why trade treasury futures instead of stocks? Well, so right now there's a couple of things that kind of make stocks difficult to day trade. One is the pattern day trading rule, which will be gone in a year or so. So you need like what, $15,000 to even do day trading. And then even if you get around that, then there's the wash trading rules where you have to go and set yourself a specific way in the taxes, which really only makes sense if you're making a ton of money from it. Meanwhile, I can come over here on the treasuries. I get lots of leverage and I get something that's very economically sensitive and I can watch and trade every day. So for scalping, there's a lot of really big advantages to trading the treasuries. And on top of that, like your ability to gain an informational advantage here, I think is really great because there's a lot of good information that could affect the way that the treasuries are moving. And there's a lot of players that, you know, aren't able to play into those things, you know, like probably it is going to move up that day, but they can't really do anything about it because they have to sell the hedge or whatever the deal is. And they know they're going to lose money. Right? So there really can be good opportunities in the treasuries. Although, you know, really what you want to do is like start with the treasuries and then eventually you will branch out. Although probably branching out will turn into trading higher time frame. So yeah, there's something wrong. So the reason I'm going like, that's not right, is because the number that it seems to have scraped was 14.15. So 3 times higher than it was yesterday. No way. No way. It's getting something wrong. There's no way. So let's go to the December contract. Options quotes. It says 5.05. So something about I screwed something up somewhere. But it also is having issues now. When I refreshed it, it loaded the file, but then it says, no, you've already added for today. Okay. So, can pull up terminal here. Yeah. Uh-huh. Mm-hmm. Oh, that's weird. Well, yesterday's volatility was not 4.65. It was 5. It was over 5, wasn't it? And it is... Oh, no, it's the 12th. Let's see what that does. Where did my output go? Volatility for 11. No. Here. Loaded file. 11th. 12. That looks more correct, although I'm surprised that we're that far away from the levels. I guess that means that there could be a little bit more downside. It was 4.65 before that. Yeah, 4.65. I don't remember what it was yesterday, but it was over 5. So let's just say that today and yesterday were 5.05. Was it just maybe the reason it's having issues for me is because it put it down as an integer. Although I don't see why that would screw it up. Now to come and take a look. Double data equals double dot parse doubles. I don't know. RTD, hey, remember me? No, but you know what? YouTube did something where like people's names change and it doesn't show you Zayn Ali. Oh yeah, I do remember. Where'd you go? Where you been? Got selected in Air Force. Well, that's good. Then what are you doing? Wasting your time trading? I don't know. Let me think about that. If you're in the military, does that make you more or less suitable for trading? I'm going to think less, though. I think that like day trading and being in the military would probably be like way too much stress and strain on a person. Oh, that's interesting. A big old order there in the 2-year, isn't it? I'm a little suspicious of that, though. You know what? There hasn't been a large order or a spoof really this year that I wasn't, like, suspicious of. Trading for extra income. Tell you what, man, when you work in the military, if you do it right, you can end with a huge wad because you basically have no expenses. But the problem is that everybody spends it. If you just like literally save every cent, don't spend any on anything that you don't need to, you can come out with enough to basically retire. But instead, everybody goes and buys a Raptor with it. Okay. $100 million corruption scandal rocks Ukraine, huh? It's the top story on Zero Hedge right now. Where's this October inflation crumbles amid biggest drop in rents in 15 years? So I'm trying to sort out perhaps why we saw the downside starting at about the top of the hour. So about an hour ago. Well, let me come in my new squawk here. The unemployment rate for 20 to 24-year-olds in the U.S. is 9.2%, the highest level since 2016. White House explores moves to limit power of proxy advisors and index fund managers, echoing concerns raised by CEOs like Elon Musk and Jamie Dimon. That is very pertinent to my interests, but not what we're looking for here. I'm not 100% sure what they are referring to by that. OPEC forecast. Okay. So oil is doing stuff, and that's what that's about. I didn't really notice that. Like, well, I mean, we saw that oil had moved on the volume profile charts. Well, when I come in and look at like the 5-minute chart, all of a sudden I realize, wow, they're getting pummeled. They're down almost $1. This is OPEC. Okay, but I don't think that explains the Treasuries move. Treasury Secretary Besant 30 minutes ago. The economy was in a great place before the shutdown. Wouldn't say a great place, but the shutdown definitely hurt. The shutdown definitely hurt. Okay. Will the Wall Street Journal let us read this story? No, I need to find like a paywall. Okay, here we go. I can read it through MSN. The White House is exploring new measures to curb the influence of proxy advisors and index fund managers, wading into a hot-button debate raised by high-profile CEOs, including Elon Musk and Jamie Dimon in recent months. Trump administration officials are discussing at least one executive order that would restrict proxy advisory firms such as Institutional Shareholder Services and Glass Lewis. People familiar with the matter said that could include a broad ban on shareholder recommendations or an order blocking recommendations on companies that have engaged proxy advisors for consulting work, the people said. Officials also are, I don't like the way that they worded that. Officials are also exploring limits on how index fund managers are allowed to vote, seeking to curtail the power of such behemoths as BlackRock, Vanguard Group, and State Street, the people said. These three together own, on behalf of clients, roughly 30% or more of many of the biggest U.S. publicly traded companies. One measure being discussed would require these index fund managers to mirror their votes in line with clients who choose to vote. Oh, now that's I can't say behemoth. I just, I was rushing, and I don't know. I don't think that my brain and my medicine is completely kicked in yet or something, because I do feel like I'm tongue is not working quite right. The discussion, which has been going on for weeks, are still fluid, and various drafts of the proposed executive order have been circulating. Any moves by the White House would add to pressure surrounding ISS and Glass Lewis, the two biggest proxy advisors. The firms are under attack from JP Morgan's Chase's Diamond, who said they have conflicts of interest, and Tesla's Musk, who has called them corporate terrorists. Meanwhile, a newer entrant, Broadridge Financial Solutions, is seeking to siphon off some of their clients. A White House official said until officially announced by the White House, discussion about potential executive orders is speculation. Okay, so I'm more interested in the whole bit about how the index funds have to vote. But maybe that's just because I don't know a whole lot about proxy advisors and all of that. And what's going on. This is an industry I don't think I've ever heard of before. Okay. In a statement, ISS has said it is a registered investment advisor already regulated by the Securities and Exchange Commission and is committed to operating in a transparent and ethical manner. ISS is proud of its history of providing high-quality, independent, and objective advice. Spokesperson for Glass Lewis said providing consulting services to boards and advising shareholders on how to vote creates a significant conflict of interest, but also said the firm prefers that such matters be handled through the regulatory process rather than executive orders, of course. Glass Lewis recently said it would no longer offer its benchmark voting recommendations to clients starting in 2027, referring to the firm's main vote recommendations that are distributed broadly, focusing on tailored advice to individual clients instead. At least one executive from Broadridge has been actively lobbying on Capitol Hill, trying to convince lawmakers that the firm is different from ISS and Glass Lewis. One of the main points, Broadridge isn't giving corporate clients advice or trying to steer shareholder voting, but rather provide research and voting infrastructure services. Broadridge is not a proxy advisor, the firm said in a statement. We do not provide proxy voting recommendations, nor do we have the intention to do so in the future. Broadridge is making inroads with some large clients. Goldman Sachs Asset Management and JP Morgan Asset Management have both shifted their business to Broadridge, people familiar with the matter said. Broadridge has also hired away or is attempting to recruit executives from the proxy advisor firms and large asset managers, people involved in the discussion said. Major index fund managers such as BlackRock, Vanguard, and State Street have investment stewardship teams that make voting decisions on behalf of clients who hold their funds. These index fund managers tend to vote with corporate management. The activist investor Carl Icahn refers to the big three index fund managers as a cartel. He recently told the Wall Street Journal, arguing that they made it impossible for activists to run proxy fights for control of corporate boards. Yes, 1,000 times. Guys, I can't tell you how happy I am to be reading this stuff. It seems like a tiny story that probably everybody's going to forget. I'll go and I'll make a TikTok about it. And everybody will just completely ignore it. But I think this is a big deal. This is a big deal. Because the whole thing is that public companies are supposed to be run by the public. And we have this whole corporate governance structure and like shareholder votes and all of this sort of stuff. So that the corporation is in alignment with the public interest. And what has happened is the things have evolved to a point where you just have no power through the voting. And a lot of it is because the index funds just always side with management. So if this changed the balance of power and activist investors, had an easier time of it, I think that would be a very big deal and a very positive development for the country, really, the world. Maybe one of the biggest shifts that we could possibly have. Okay, the index fund managers have all introduced investor choice programs in recent years that allow some clients to make voting decisions themselves, though there have been logistical hurdles to full implementation. Large asset managers are able to put the necessary resources into voting their shares in accordance with their fiduciary duties to clients, but smaller fund managers tend to rely more heavily on firms such as ISS for advice on hundreds of ballot proposals. A measure that can curtails those services would be disruptive, some investors said. Okay, so they're saying these firms, they advise what to do, and we don't like the advice that they give, so we're just gonna not let them give advice anymore. I don't know. There's a need for the service. They really add value for the average investor, though it's sometimes hard to tell whether their recommendations are good or not, says Tao Li, a University of Florida finance professor who studies the firms. I want to learn more about this guy later. It's a cheap defense against lawsuits from the investor's own clients. We're using a reputable third-party service provider. Proxy advisors have said that they offer data and analysis to investors who make the final decisions on how to vote. Critics have said voting recommendations from ISS and Glass Lewis often carry the day, forcing boards to follow pay and governance practices they might otherwise eschew. The White House is also considering a directive, some of the people said, to raise the requirements for investors seeking to put a proposal to a shareholder vote through an annual proxy statement. White House is also considering a directive to raise the requirements for investors seeking to put a proposal to a shareholder vote through the annual proxy statement. Currently, shareholders holding as little as $2,000 of securities for a minimum of 3 years can put forth proposals, often to the annoyance of corporate management. I see. And that part is probably okay because, if it's something important, then some rich guy will bring it forth. As long as the level is not too high. This is a big deal. But I think it's really weird that the way it's, right, that they're focused on proxy advisors. Let's see here. Jamie Dimon, proxy advisors. Okay, this was back from March. I don't remember this story. Jamie Dimon sharply criticized the top two advisory firms' little-known apparatuses that have become the target of business ire over their outsized influence and perceived political agendas. JP Morgan chief described the institutional shareholder services and Glass Lewis as incompetent in an interview with Semaphore on stage at BlackRock's retirement summit in Washington Wednesday. He said, ISS and its smaller rivals have contributed to a regulatory environment that is driving companies out of the public market. The rising influence of ISS and its rivals to harness shareholder votes towards outcomes the executives don't like isn't the only reason the number of U.S. public companies has fallen from 7,000 in 1996 to less than 4,000 by 2020, but it has contributed. That decline started after the Sarbanes-Oxley securities law overhaul in 2003 and was accelerated by giant pools of venture and private equity funds amassed in the wake of the 2008 crisis. Dimon framed the issue as one of American principles. ISS, the largest of the proxy advisors, is owned by Germany's Deutsche Börse, and smaller rival Glass Lewis is owned by a Canadian private equity firm. Anyone who gives them money, shame on you, Diamond said. The firms should be gone and dead and done with. Oh. So is this executive order, the reason that the Wall Street Journal is so focused on that particular part is because this executive order would effectively end those businesses. Either Glass Lewis, ISS, or both have at least 4 times since 2013 recommended that shareholders either lodge protest votes against Diamond's pay or, more meaningfully, strip him of his dual role as chairman of JP Morgan's board. Shareholders sided with Diamond each time except a non-binding vote on his special one-time $53 million bonus in 2022. So basically, we could get changes to proxy voting, but not for the reasons that Seth wants some, which is that he thinks that the public doesn't have enough power in board fights, but actually because the CEOs and other of Trump's rich friends are complaining about it. Well, that's a little disappointing, but we'll take what we can get, right? This article, though, let's keep going because it has more. Little known to the general public, both ISS and Glass Lewis help investors decide how to vote at shareholder meetings by parsing through voluminous filings and interviewing corporate boards and managers about key decisions like pay, takeovers, and social stances. But they've come under criticism from conservative politicians and some business leaders who believe they have pushed progressive agendas of environmental protection and diversity through their recommendations. Elon Musk compared ISS to ISIS on earnings calls after it recommended shareholders vote against his $56 billion pay package in 2024, which won handily anyways. The resulting investors' lawsuit, in which a Delaware judge invalidated the award, sparked Musk to move Tesla out of the state and prompted a mild panic about the future of Delaware incorporations. ISS and Glass Lewis get their power from a government court. In 1988, a Department of Labor ruling essentially allowed corporate pension plans, many of which lacked the resources to research thousands of annual ballot measures, to outsource their votes to professional firms. 4 decades later, support from ISS and Glass Lewis is now a must-win for any activist, corporate raider, or board. It's given a handful of deciders at those shops micro-celebrity status, but it has also made them targets in recent years when their recommendations sometimes ran against an ascendant conservative movement. Both Glass and ISS have joined the corporate retreat from DEI in separate decisions just days apart. Both said they would pause or reconsider guidelines that had encouraged boards to include diverse directors or else risk losing proxy advisor support. Okay. Very, very interesting development. Meanwhile, the Treasuries have bounced all the way back up. I think that is driven by some movement in the dollar here. And that movement in the dollar is probably being driven by oil. So it does, you know what? I think we missed an opportunity there. Because when we were looking at it, and I was like, well, why did the treasuries go down? And the only like really big headline that I saw was the oil thing. And I said, well, oil would be a reason, oil going down would be less inflation, would be a reason to buy treasuries, not sell them. But if we had bought the treasuries at that time, we would have made money. So I think that that was an informational advantage there that I kind of missed I didn't really see the opportunity in it. I understood what was going on, but I didn't think, oh, that's a good reason to buy the 10-year treasury. Oh, wow. Okay, another story to read here. This Thursday, let's start with the title. October inflation unexpectedly crumbles amid biggest drop in rents in 15 years. Hey, have I not been saying this? That, like, we kind of know where inflation is going because we know where rents are going? Mm-hmm. This Thursday at 8:30 a.m., the BLS was supposed to publish its monthly CPI report, perhaps the most important number for roughly half of hawkish voters inside of the Fed, for whom the inflation mandate is more important than employment for various political reasons. I really do feel like that they're focused more on, like, it really bothers me, honestly, that we're more concerned about inflation being half a percent above target than we are about the labor market completely collapsing. It just seems so crazy to me. Okay, anyways. And therefore, the key number for the Fed's December decision. Alas, the government will most likely reopen just hours earlier, and the various government workers won't have had time to compile the report. This will be the second CPI report in a row, which will not be published by the U.S. government. Conveniently, just like with various alternative labor market indicators, which we noted earlier have shown a sharp deterioration in U.S. jobs in the past month, there are other indicators traders can look towards to handicap odds of a December rate cut and also what the CPI print, when it finally does come, will show. We'll start with open brand price data, according to which U.S. consumer durables and personal goods inflation decelerated notably in October for the first time in 3 months, reflecting a pickup in the degree of merchant discounting, i.e. underscoring the acute consumer weakness we discussed recently. The group's measure of prices for big-ticket goods and personal care products rose 0.22% last month, compared with a 0.48% increase in December. Open Brand, which tracks prices daily from online marketplaces, retail websites, and brick-and-mortar store listings, said price growth slowed across all groups but communications devices. Among products in the appliance and personal care groups, a number of categories have been on a downward price growth trajectory over the last several months. For example, prices of hair dryers jumped 1.15% month over month in August, but slowed down to 0.82% in September and fell by 1.27% in October. Similarly, laundry, including washers and dryers, grew by 0.9% in August, but fell by 0.48% in September and 0.86% in October. See chart below for select examples of appliances and personal care products that experience price declines. Price declines were in part because the magnitude of discounts edged up from the prior month to 20.4%, nearly matching the highest of July last year, while the frequency of merchant discounting eased. Prices in both the appliances and personal goods categories declined. Another inflation gauge from Price Stats also showed price growth eased overall last month, though there were pockets of firmness in categories like household equipment, furniture, and electronics, which have higher share of imported goods. The uptrend in inflation has stalled somewhat in October, said Michael Metcalf, head of macro strategy at State Street, which recently acquired Price Stats. This still requires careful monitoring as we move into the seasonal discounting season, but for now, inflation remains firm but not frightening. The results suggest merchants are limiting price increases to ensure market share as inflation-wary consumers grow more price conscious. So much for all those worries about runaway prices due to tariffs, which we said in the summer of 2024 would not happen for one simple reason. Unlike in 2021, there simply isn't enough pricing power to indiscriminately hike prices. Less accurate estimation of CPI comes from Goldman, which has come up with a model constructed from alternative price data for most major components to track underlying inflation. Goldman's estimate for what the October core CPI would have been suggests that monthly inflation was roughly in line with its September pace. The bank forecasts 0.24 month over month for October versus 0.23 in the September release. But while many of these prices tend to fluctuate on a monthly basis, there has been a core key aspect of the CPI basket that has been in secular decline for the past year. And that's the one we all pointed to way back in the summer of 2024 as serving as the inflation cushion for the next 18 months, namely rents, which the BLS reports with a huge lag relative to the real-time prices. The reason for the lag is that the majority of renters renew their leases, and currently renewal rents are at a substantial premium to new lease rents. However, this situation is not anticipated to last forever, and the more details tenants can get on new leases, the more they will elect to move and capture the lower rents, which accounts for a third of the BLS inflation calculation, as it represents the biggest chunk in the CPI basket. Owner's equivalent rent is 25% of the basket. Why are my eyes watering so darn much? Maybe, you know what? Maybe there's more dust in here than normal, because you notice I don't have the scroller. It fell off the wall. I have it like stuck up there with 3M strips, and I guess they eventually gave out. So I need to get a better way of mounting it. I think I might be able to just use nails. But it's on the floor. You can't see it on the floor, but it's on the floor. We'll have it back. Maybe probably tomorrow. But maybe that falling kind of kicked up dust because it kind of fell on the side of the thing. Yeah, okay, so here is a picture. This is how much of a downside buffer core CPI has. Real-time rents are flat, negative, while BLS reports owner equivalent rent at plus 0.56 or plus 5.6. This will provide an inflation cushion for the next 18 months. Which, by the way, means that there could be some situations where we are seeing inflation numbers come down, but actually it's not good. And we're actually seeing inflation, but you're not seeing it in the official numbers because it's being hidden by this owner equivalent rent lag. So what's going on with rents? As Reventure CEO Nick Jurley points out in the following thread, the weakness in the rental market now is alarming. Suggests there's much more deflationary pressure in housing/economy than people understand. And as we said in 2024, and as the Fed's Stephen Moran echoes now, 2026 will be a year where CPI drops even more. Some charts to underscore the slide in rents. According to CoStar, there was a negative 0.31% rent growth in October. This was the biggest drop in over 15 years. While many rents are only down slightly, some markets are tanking. According to RealPage, effective apartment rents are down 8.1% year over year in Denver, 7.4% in Austin, 5.9% in Phoenix, and 5.4% in San Antonio. It's not just apartments, it's happening in single family too. The largest publicly traded landlord in America, Invitation Homes, just reported negative new lease rent growth in quarter 3 2025. It was the first quarter 3 they've reported a negative print since they went public in 2017. Zillow just lowered their 2026 single-family rent growth forecast to just 2%, while their multi-family forecast is negative 0.4%. Blended, that's around 0.8 to 1% rent growth in 2026 from Zillow's forecast. The relationship between rents and home prices in the long run tend to move together over years and years. So you can view the rental market as a kind of leading indicator for the housing market more broadly, or as an anchor for what to expect. In other words, so long as rents are disinflating or deflating, there will be no rebound in average home prices. The ultra high-end housing market is a separate category, and more likely, home prices will continue flowing or going negative. What is behind this sudden drop in rents? Simply said, the same reason housing prices soared after Biden entered the White House and opened America's borders wide, inviting every illegal alien into the country. The plunge in immigration into the U.S. and the resultant drop in demand for rental properties. Okay, maybe. maybe in rental properties specifically. But I think that there is some emerging weakness in the labor market overall, which you would see in rents. As Jerley notes, the key metric to track here is immigrant work applications calculated from the Brookings Institute. The metric is down 60% in the last 4 to 5 months and correlates strongly with rental demand. Wow, it does. So if your next rental payment is lower, thanks the administration for closing the border. You know, I think that we would need a lot more data to say something like that. That is like a really strong conclusion based on, you know, a relationship that, you know, could have a lot of other factors involved. But if a year from now or 4 years from now, we find that the decrease in immigrant population did change rents in particular, that I think would be a big deal politically. Okay, so where are we at? After this move up in the treasuries, we have been ranging. It's been a wide range between 29.5 and 31. Kind of a wide and messy range. This is interesting because the volatility projected range is down there. We didn't touch that. But it doesn't necessarily mean that they have to move. Well, we do have a lot of people on the docket here. Let's see here. So I believe we are Williams speaking right now. Paulson at the top of the hour, 8:20. Waller, Cent is speaking. Bostic, Moran later in the day. Also, we've got a 10-year auction today. That might explain why liquidity looks relatively thick through here. But do you think that demand for the auction will be strong? Well, the auction yesterday was strong. Like, what did we all have today? Government opening. Probably will see some flows from that. Because, you know, just when it opens, people have to do stuff, even if they were all expecting it. Then we got an auction today. Then we got a bunch of speakers. And then we're right in the middle, and as it pertains to volatility, it's a Wednesday, so we tend to have more activity. It's in the middle of the month, so rebalancing activity is going to be, well, but then we also had that big decline. So I think rebalancing activity, especially in the equities, is going to be pretty mild. So I don't think that gives me a clear imbalance to one direction or the other. I suppose I am kind of leaning on the long side, simply because I do think that there are some issues in the economy, and the 2-year is like lining up. But when I think about the trade, buying the higher end of the range so that it can go to 04.5. But 04.5 seems like way too far to me, given the current circumstances. That would be a really strong trend to come in to take us up to 04.5. So I think for now, let's wait. Let's sit on it, see where it goes. We just read a bunch of good stuff. We are going to start, I think that Treasury volatility will increase a little bit here in the next week or two because, they've been quiet because we weren't getting much data. And now today you're already seeing a lot of information, a lot of things happening. Okay, they stepped back up to it, 31. want to see if we're going to get if there's anything about this proxy voting change stuff on Reddit. Or maybe I should search for a proxy advisors. Nothing yet. It was stepping up there for a second like it was going to go past. Oh, you know what? I totally forgot. Remember yesterday, we were like kind of eyeing 113. And then it just kind of sat here and didn't do anything. After we left, it did end up going a little bit higher. And it did end up coming like right to our line. So I thought that was really weird. Maybe that has something to do with like European close flows. If that went through, I would be really interested to know what Carl Icahn. What should I study in college to break into finance and investment? Depends on what you want to do. Dude, that is way too broad of a question. But what we talk about, we talk about market microstructure. And there's this book. This is a graduate level book. Trades, costs, and prices, financial markets under the microscope, where they go through the last 40 years or so of empirical research into market microstructure and trading. And we learn some pretty profound things about the market. But, that's like postgraduate stuff. So There was a story about Carl Icahn last week on the Wall Street Journal. Carl Icahn is working to revive Icahn Enterprises after a short seller attack reduced its market value by billions and his net worth. I would love so much to learn more from him. I often think, oh, okay, if I got an extra $10,000 right now, and what would I do with it? An extra $10,000 that I couldn't put into like my 401k, right? And I think that generally speaking, I would just put it into my Mad Money fund where I have like 5 stocks, But I often think I would like to have a bigger venture. Something that kind of turns into its own kind of business, kind of like what this has. But I want to go deeper with the business. Activist investing could be one of those places, But how would you, get into that? I feel like that being a person on social media and talking about it would be like a good starting point. But I think, that I'm woefully under it. Yeah, actually, you know what? The more I think about this, the more I like it though, because one of the things that I've been thinking about recently has been, well, we have our project. We've got our trading platform that we want to make. And that is a good idea, but that's a really big idea that'll probably take me years to do on my own. I really don't think that like funding it as a startup really makes sense right now, given the climate and just the idea. I don't think that it's really lends itself to that kind of investment anyways, Meanwhile, like I kind of feel like what am I learning new? What am I picking up now to augment our trading or what we know? And I don't really feel like I'm doing a whole lot there. It's like we learned all of the stuff that's really important to understand why the market behaves the way that it does. And then it was kind of like, oh, I'm satisfied with that. And I really shouldn't be. But more so because you just got to keep learning and, that's how you stay sharp. But going into activist investing, that's a place where there's lots to learn. Lots and lots to learn. And could keep motivated and could augment our other stuff. So I really should, I think, put more into learning about activist investing. Let's see here. The Trump administration has reportedly sped up H-1B and green card processing and has naturalized more citizens than any previous administration. Okay. I tell you what, when they made that announcement that it was going to be like $100,000 or whatever to process an H-1B in the future, oh my goodness. The amount of discussion and fury that I saw online about that on both sides, it is something that it seems to me crosses political divides. That is to say that it's not just only Republicans that want to get rid of H-1Bs and Democrats that think H-1Bs are great. You've got half of Democrats that hate them and half of Republicans that hate them. It's really quite wild. And then there is, of course, a lot of Indian people, especially in the tech space, because India put a lot of effort into developing tech, essentially. So there's a lot of them out there to discuss it. Now, from what I've seen, H-1Bs probably do depress wages in the tech sector by a small amount. I think it was like 5%. What's from the study that is commonly cited. I don't know, man. There's a really big question here. There's a really big piece of information that we would need to really make decisions about these sorts of things that we just don't have. And it troubles me that we don't have it. Like the fact that we don't have this thing, that this isn't discussed in economic circles, that this is not something that I commonly see debate about, empirical studies about this thing. I never see anything about it. And that seems wrong. Makes me think that there's a conspiracy there, you know? But what is the optimal immigration rate? Is really what it comes down to. So when we look at how many people do we bring in and where do we bring them in from, where's the science about what is the best thing? Because we keep being told that, like, oh, you know, the more people that come in, the better. And we know that that's not true. I mean, there maybe is a top line GDP growth sort of a thing, but it doesn't necessarily help everyday people. It kind of hurts everyday people because then their labor is worth less, right? So when you try and factor in all of those different things, and of course you can have opinions on what would be a fair framework, but like that's the thing that I think should be debated. What is the optimal immigration rate? Because probably if the entire immigration was just completely shut down, that would probably be a negative thing. So how much does there need to be? And there's this whole thing that, like, well, they say H-1B visas are needed, but there is definitely H-1B visa abuse out there. I genuinely believe that there are a number of jobs that I have applied for in the recent past where they were intentionally shooting down everybody so that they could hire an H-1B later. I really think that that's what was going on, because they would ask questions, like really, really difficult questions about technologies and things that, like, are not really very relevant or pertinent to anything that anybody does. Like if you're using that heavily in your workflow, you're doing something wrong. And so I can only imagine that it's picked because people don't know very much about it, and then you ask a hard question, and that guarantees that the candidate will fail, so that then you can come in and get an H-1B visa person and just ask them easier questions or prepare them for what questions they're going to be asked, right? I really think that that's happened. I think I've seen that. But I don't have any proof, so whatever. Does it happen? It definitely happens, but how big of an impact is it? I'm not sure that it's a huge impact. So I don't think necessarily that's saying, like, well, there's been more H-1B, that means that the MAGA movement is a scam. No. It just means that it's not a super big issue. And this is where you get into the issue. Because really the issue there is, and I hate to kind of go down this road, because I know that, you know, there's people have their political proclivities, and some people are going to really like what I'm going to say, and some people will really hate what I'm going to say. But I'm just saying this because I believe that this is information that can help you predict the future. The issue is Trump himself and his attention span. He is not really, him and his world is not really affected by H-1B visas. It's not like a huge issue to him. And the issues that he's going to be talking about and focused on are going to be the ones that, like, the people whispering in his ear are saying, right? He does not have, like, again, one of the things that I think can kind of help understand Trump is that he is probably ADHD. everything that I ever saw before he got into politics, I saw many things like inspirational posters and information that is given to ADHD people. They're like, here are some people that have been successful that have ADHD. See, you can be successful too. And Donald Trump was always listed on those posters. I think that his behavior is consistent with ADHD. And that means that he is going to like lose track of the plot, get distracted, not keep his focus on where he wants it to be strategically. And that's what I think is going on right now. Honestly. That's what I think is going on right now is the thing that like triggers him and like gets him up and going is trade and foreign policy. And so he's put all of his effort into that. And meanwhile, the other parts of his platform, the parts that really actually got him elected, are neglected. So when it comes to H-1B, I am really not convinced that H-1B is a huge issue. Like, I would like to see reform in H-1B. I would like to see those abusing H-1B for that to be, addressed. But like in terms of the net impact that fixing that would have on the American people, probably pretty small, right? And there's many other things that could be done right now, particularly housing. Housing is really the big one, right? So the thing is that if I was president, I would probably have the same problem. I think that this is probably one of the reasons where we have struggled in the development of this channel. Is I might know a lot of things about how to do content and how to make good content that grows and things like that. But at the end of the day, I have a short, a short attention span. And so I might go, okay, here's a strategy. We're going to do that. And then the next day I'll forget it, But the strategy probably should be address the cost of housing. And I am not convinced that that is really due to like immigration. Like really immigration is like an exacerbating factor on top of all of that. Like you get rid of all of the immigration, we still have a housing problem because we don't build enough houses to deal with just the population growth from people having kids. And it's been like that basically since 2008. Well, it's annihilated housing. Well, it's the same issue there. That the immigration factor in Canada is a much larger factor in Canada than it is in the United States. But even with all of that, you would still have a housing issue because the amount of houses that we built is below the population growth rate. We're below replacement rates. Well, so when you go into those statistics and everything, like I don't think it's the case that the U.S. population declined last year, right? I don't know if there's ever been a year where the actual population declined, but or where a census where the population declined, right? Even if the but there's lots of factors that go into that. I don't know if we could separate all of those out. Okay. But you still have to go back to, it's not mental gymnastics, dude. You're focused on one particular thing that's like teeny tiny compared to the bigger problem. Hold on. I need to find the right chart here for you. I think this one is probably paints a good picture for you. Right. Okay. You can't do this. Look at this. We have been building less houses for pretty much every year. Less houses than we built in the 90s. It's just not even. And the issue is, it's been going on for like a decade. It's been going on for a decade. So you can kick all of the immigrants out. It's the immigrants is probably maybe like that much. You know what I mean? Like it's just really, it's not going to fix the problem. You can say it's a problem and that's something that should be addressed, but it's really not going to fix the bigger problem of housing affordability. And kind of one of the things that happens, so this is one of these properties of markets that we don't talk about a lot, but when you have a commodity that has very fixed supply and demand, that tends to make them more volatile. Whereas that really flexible supply and demand like we get in treasuries makes them very, very stable. So when you have something that is already in balance, and that imbalance makes the flexibility of the supply and of housing worse, then when you add the immigrants on top of it, it exacerbates the problem significantly. But if you take all of the immigration out, housing is still going to be unaffordable for people. You are going to need policy to build more houses. And I think that that's hard. I think that that's hard because it's not just permitting. I think another issue that I see is a lot of Republicans think, well, all we got to do is get rid of all of the permitting requirements and all of that, and then we'll build tons of houses. But it's not so simple. Part of the problem is that the financing for it and everything doesn't really make sense. So there's not really a lot of money available to home builders the way that it was over here, right? Over here, we had policy and monetary policy that made it easier for home builders to build homes. And then when we changed all of the financial regulations in 2008, that went away. So this is a difficult problem to solve. And there's a lot of things that can be done, and they're not doing anything about it. Okay, when wages are funneling to cheap imported labor, who wins the competition for that limited housing supply? Well, so you're really talking like it gets so much more complicated than that, though, right? So like in the article that we were reading earlier, right, they were talking about rents, right? So are the immigrants taking single family homes? Probably not. Probably most of it is in rents, right? So ergo, when we've seen a lot of immigrant leave the United States in the past 6 months, you do see a more outsized effect in rents because they were renting. But again, like if you want to own a home, owning a home is too expensive right now. And that's not necessarily because of H-1B visas, right? Like, you know what I mean? And then there's this issue like, okay, if I am a home builder and I have limited financing available, which houses am I going to build? I'm going to build the houses that I make the most money on, which means that they tend to build more high-end housing supply than the low-end housing supply. The starter homes. They're not building a lot of starter homes anymore. Right? Where do those issues come from? Right? But the point was, it seems like that it is easy for powerful people to influence Donald Trump's attention. And they have effectively done so in a way that I really think works against the agenda that got him elected. Because I don't think that it was just about immigration. And what you're going to see here over the next 4 years, I think the reason why this point is worth arguing about is because he's made a huge dent in immigration, man. Really has. Like at least the immigrants from Mexico, illegal immigration from Mexico, a lot of them are going back. So much so that it is having a negative economic impact. That would be a temporary impact, but it is having a negative economic impact right now. So you extrapolate that out over 4 years, I wouldn't be surprised if towards the end of Donald Trump's presidency that they do finally make a major reform to the immigration system, one which includes pathway to citizenship. That basically they say, we feel that the border is secure now and that there is not that incentive anymore for people to come over. So for the people that really are still here, now let's deal with them. I think that was always kind of his plan. And so you solve the problem. That's not going to solve all of these other problems, particularly housing. Yeah, they'll eventually fall into another mass amnesty policy. Yeah, they absolutely will. Wow, I don't know if it's that they have no choice. I think that that's just the way that the forces go is probably going to lend itself towards doing an amnesty for the people that are here. There's too much incentive for the politicians to do it. And really the incentive against doing it is that it encourages more illegal immigration. But if they feel that the illegal immigration problem, the border problem, has been solved, then that kind of dissolves that. I might be a little bit too optimistic here in thinking that in the end of 4 years that we'll consider the border fixed. But, whatever. At the very least, if we come out, maybe in 3 years, I guess it's 3 years now, and a Democrat comes into office, right, and then things change, we'll know, actually, the president does have a considerable effect on how much illegal immigration happens, and they can stop it. It can be done, and it's just that they don't want to do it. That's really the big lie of the Biden administration was, there's all this illegal immigration and we just don't know what to do about it. It's happening because, there's things are going not very well down south and that's just why there's so many people. No, it's because you're actively encouraging them to come. And as soon as you started punishing people for coming and saying, we're going to arrest you, we're going to deport you. And people started seeing the laws actually being enforced. All of a sudden a lot of them are self-deporting. So it's absolutely the case that it can be done. Now, extrapolate out a century and consider the survival of the state. The native population is just not reproducing fast enough. Okay, so I think that if you don't have the immigration, okay, and we do see the population decline, that is a problem that probably solves itself. Like the reason, or a major factor, I think there's multiple reasons why the birth rate is low, and like which one is the biggest one, I don't know. But one factor is that it's just hard to live. It's hard to be comfortable and raise children. A lot of people feel like that they just don't have enough money to have kids. Like, honestly, for me, raising kids is a financial strain, and I'm a top earner. Well, I was before I got laid off, but I'm a top earner. Okay, so if I'm struggling, then man, the people that are like, only making a third what I make, which is like the average, the average yearly earnings or median yearly earnings in the U.S., like they must be really, really, no way that they're going to have kids. Right? So when you start to see the population decline, you're going to see a lot of shifts, including cultural shifts, ones that will probably encourage having more kids, right? Like basically what's happening is we're creating an environment by importing all these people that makes people not want to have kids. And then in the kind of the natural, because everything's kind of a pendulum usually, right? Kind of a pendulum, and what makes the pendulum swing the other way. But what we've been doing in the West is a pendulum went like this, and then we've just been holding the pendulum here. We're like, I don't want to go back the other way. Let's just import people instead, right? And so those forces that would cause people to all of a sudden be like, actually, you know what? I do want kids. Have it swing back the other way, never come in to fruition. Studies show that youth don't couple or have casual sex like our generations did. Dating consumption. Well, okay, so first of all, I don't know if millennials fit into that category, but there are definitely other factors involved, right? And maybe those are more major factors. Like maybe it is just the case that the internet has screwed us over, I think another major factor is that women are more educated than men now. And I think that even when you start to get into certain demographic groups, you're finding that the women are making more than the men. And for some reason, women always insist that the man is better than them. And so they're not attracted to anybody. They have a smaller dating pool. So that's probably a significant factor. And then it's just the fact that like people don't even have the social skills or go out and do anything to, even come into the situations where they would find relationships. Say it's pretty disheartening to see people I grew up with speak about my family like they're criminals. Because your family was illegal immigrants? The risk is literally too high. Yeah, I think that one is already kind of changing, though. It's really interesting on TikTok. I go on TikTok, and I'll see one video that will be like a girl complaining that if they go out, that no guys approach them. And then the very next video will be a girl complaining about being approached by a guy, So it seems to me like there are two, that even the women themselves are kind of divided about this. Like there's one group of women that, and especially when you look at millennials, that like they don't care if they ever get married and never have kids, and they're totally okay with that, and they think that they're the girl boss, right? And then there's this other group of girls that that are kind of in that same situation, and they're very, very unhappy about it, but they're kind of convincing themselves that they're okay with it. You know? It's not, yeah, well, but to your average American, what's the difference? It's, yeah, it's, the issue is that we are, here's something that comes back to the stuff that we really focus on this channel, which is complexity economics, okay? So in complexity economics, what do we find is that the structure, the very rules of the game, dramatically affect optimal strategies and outcomes. So here in futures trading, having the way that the limit order book works, it works in a way that favors certain types of participants, the ones that are the fastest, and it results in certain outcomes, right? And the thing is that the actual statistical effect that can come about from that structure can be super teeny, 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 tiny. But especially when you're talking about like competitive system, like a social system, even that tiny advantage can just grow to be a huge gulf and dominate that system. And so I think that these people that are concerned about these things are generally correct, that we have created a immigration system that encourages people to immigrate illegally, essentially, and for the US to not have much control over the border. And there are people in politics, because they benefit from that in politics, that are basically kind of doing this. And it is ultimately not a good thing. And so what do we have to do? Nobody's sitting out there saying, well, what we need to do is we need to hate the illegal immigrants and go and, find them and bully them if we can. And no, you just need to change the systems that are involved, right? Need to actually enforce the border. We need to have a discussion about how much immigration should we have each year and where they should come from. Second part is the one that the discussion that people really don't want to have a discussion about, right? Because then you have to talk about like, well, maybe we shouldn't bring in people that are Muslim nationalists and want to turn America into a caliphate. Okay, but we don't have to talk about that one because that's so far away right now. It's whatever. Probably it's going to happen, but what are you going to do? Yeah. What's the other answer? People who are naturally racist and gather into groups. Oh my gosh, hey Paul. Don't go starting into, some of those truths. Man. You think we should be dust and sand before we get that far? Oh, no. I think that with the direction that things are going right now, that Muslims could be a large enough majority in the United States to start impacting your freedoms within 100 years. Easily within 100 years. Like, just go and look at Dearborn, Michigan. Because I'm sure that when the Somali immigrants first started showing up in Dearborn, Michigan, people were like, don't worry about it. Even if that did happen, it'd be like, we'll be long dead. It can happen quick, actually. Only takes a few generations. If all of one group is not reproducing and then this other group is reproducing like mad, I really don't think that argument makes sense to me, Roos. They are, but that doesn't mean there should be mainstream political narrative. Okay, so we should not address major systemic issues in our country because it might make somebody feel bad about themselves. well, not feel bad about themselves, but it might make somebody feel persecuted. Right? That's kind of what I feel like you're saying. There are better ways to influence change in the system than flipping the table. Well, I don't think anybody's flipped the table yet, though. I mean, at the end of the day, the reality is that, like, we can't get anything done in the United States right now because the Senate is just completely broken. So the modern world, the internet, and all of these other factors have basically destroyed the Senate as an institution. It is impossible to get anything real done now. Like, people talk about, well, you know, Trump is using too many executive orders and these sorts of things. But, you know, what's going to happen is you're going to get a Democrat president and he's going to break Trump's record. Guarantee you. Because it's the only way to get anything done now. Senate is broken and impossible to change, but nobody flipped the table yet. What do you think is flipping the table exactly? So I don't know what you feel about, you know, I don't know if I agree with APOL here saying, like, if only the countries weren't so shit they came from here expecting better. But I do think one of the unspoken arguments against illegal immigration, because I think one of the things that left-leaning people kind of lean towards is like, well, we want to you know, help people. We have the ability to help people, so we should be helping them. So if all we have to do is, you know, allow them into the country and it actually benefits us economically, then why shouldn't we be allowing more people to come in? And they make it into this, like, there's a very clear moral argument that this is a good thing. But I think that the counter against that as a moral argument is, if it's good for them and it's good for your country for those people to immigrate here, then that means that it's bad for the people that are left behind where those people immigrated from. And that is a big, big deal. Because when you think about the number of people that are harmed from that population leaving is way, 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 way bigger than how it helps us. So it's really not a moral argument. It's kind of a selfish argument at that point. It's like, well, we make money from it and it helps my political party, so we're going to do it. Once you realize that, then it's, no, they're not being moral. They're being selfish. One of the big pet peeves that I always hear from people that have gone and done volunteer work in country, especially in places like Africa, is they say, you know, like, if you really want to help people, stop sending them stuff. Like, every time in Africa that you come and you send, like, clothes, like your donated clothes, what you're doing is you're basically killing every small business owner in that area that was making clothes. Right? Like, our desire to be helpful sometimes works against us. And this is the really super bizarre thing about complexity economics, is you can get this situation where everybody feels like they're doing the right thing, but in doing that, the high level emergent behavior that you get ends up being explicitly bad. And on the split side, kind of like what it is with capitalism, you think being selfish and doing, you know, what makes you money should be, like, bad, but everybody doing that, the end result is actually explicitly good. That's how capitalism runs. It's an emergent property of the system. I know it's kind of an issue though. Like one of the things that I'm seeing here though is like that this particular line of discussion always gets people talking. You know? Like, and I just don't feel like that's the important thing right now. I really don't. Because I don't know. Correct me if I'm wrong, Uzi, but I kind of feel like earlier you were saying no. We should deal with immigration first, and then what problems remain after you've reduced immigration, and then we'll see. And I kind of feel like that we've done the thing that would be necessary at this point for immigration, and that Donald Trump needs to switch over to a focus on domestic policy and addressing the issues that have made it so difficult for young people in this country to have a real life. Address the cost of living and the rising cost of everything, education, etc. Right? And I don't think that any political party will be able to get very far without directly addressing those issues. Right now, what's happening is they're all boomers, so they don't necessarily know how, like you would think Trump would be savvy enough to go, oh yeah, actually, if I solve the cost of housing, everybody would love me and probably almost everything else that I did would not matter. But he doesn't see because he's a boomer, right? All of the people that are influencing him are boomers, and so they're more interested in this, that, and the other. Well, we might get some changes in proxy voting. So, at corporations. So maybe it's not all that bad. I tell you what, so here on the Treasuries, now is like what? It's almost, well, like 8:20. Now's a good time to come and take stock of what happened. Something unusual about today. Well, we had this big move down, and then we had a big move up, and then kind of sideways. But this sideways is a much wider range than we're used to. So, I don't know. You guys, if you have other comments about that, you can bring that up and I can go back to that. But I had like another line of thinking that I was kind of going into that, like I feel like I am just way too ADHD in terms of like strategy. Why is it that I can sit down and look at it from a political perspective and say, this is probably strategically the most important things for you to deal with. And I can do it at a job. Like here with our infrastructure, these are the biggest problems. This should be our strategy. But then when it comes to myself and this stream, I can never seem to keep focus on anything. Well, maybe I think part of it is that, we tried a lot of things and didn't necessarily have success with. There's risk in one and not the others. I don't know if that's true. And there's definitely risk involved. I actually, the funny thing is that, maybe it's because it's the personal risk to me. Because at the job, I'm willing to take pretty big risks at the job, and they usually work out. I remember one of the risks that I kind of took was, there was, when I worked for Goldman, there was a manager on a team in our group that was working on SDLC stuff. essentially. And my manager asked me, they need some help. Would you be okay with going over and helping them, or would you be more interested in doing this other stuff that we're currently doing? And I said, no, that's fine. I like those guys, and I'll work with them, and we'll do this thing, right? When he was asking me that question, he was asking me because he knew that there's a certain amount of risk involved in it. They're doing a project to change the SDLC process in ways. If that doesn't work out, it's going to make everybody involved in that project look really, really bad. And there's a lot of competition within the company itself for that, right? And the manager that was doing this stuff had a pretty risky strategy. He basically said, hey, there's this company that just formed this year named Atlassian, and they have this new software that I'm really hot on called Jira, and I think that we should use that. And so we did that. So I took a big risk, and guess who won on that risk, right? Now everybody uses Jira. In retrospect, it really wasn't a big, like at the time it was a big risk, but if you knew that Jira was going to take over the world, then it's kind of like, no, that's not a risk. Like that's just win all the way. You should just go for it, right? That's kind of the funny thing, is that the things that work out, you never can see the risk in retrospect, can you? Because all you can see is that it worked out. Anyways, it's seems like that when it comes to the stream, though, like the issue with the risk is you can try something. You have to try and be really consistent with that thing for a really long time. And even if you do everything right, it might not work out. So how do you really know which things to focus on? And I might come in and be like, oh, I tried this thing and it didn't really work. But I think more recently, because TikTok just is sending me some, I think I followed one creator that I felt like she had some really good things to say about, how to do better as a creator. And they had a creator program and all that sort of stuff. I was like, hey, actually, you know what? With the way that she's going, maybe it would be worth spending a ton of money and seeing what they have to say. But then I go back, step back, and I'm like, but you know what? Like, most of the stuff that they're saying isn't necessarily anything that I never heard before. Is it the case that I'm not doing what I know I could do, or am I just not focused enough? But I think it is that I'm just not focused enough. But then the one thing that she said that I think kind of shifted me the most was she said, on TikTok specifically, if you're not repeating yourself often, you're probably doing it wrong. That you only reach a small amount of people anyways. And so to really get your message out, you're going to have to share it over and over and over and over and over again. And that's when I was like, oh, wait. So I keep pivoting between these different things. But really, I should just there's a certain video that I should probably just make every week. And what actually are those things? Right? What is it that we actually talk about? Well, we talk about order flow. We talk about complexity economics. And let's say educating on order flow. Oops. Educating on complexity economics. Giving general day trading advice. That's like, how to live and things like that will make it more, make you a more effective day trader, right? Discussing current market and political headlines. And then this really comes back into complexity economics, but talking about social issues, and then tech, because you know, you have to have an awesome computer to day trade, right? So that's like 6 different things that I've like at times switched between, where it was like, really what I want to do. I feel like we really focused on the order flow and we got all the videos that we want out of that. So let's go and talk about current market headlines more, because that's what we tend to talk about so much on stream sometimes. That's the thing that will get you guys talking the most. But then I do that on TikTok and it never works out, and then I'm just kind of lost. But then it's actually like, actually what we should be doing is we should be circling back over to here. So I think that right now, well, so one of the other issues is that the social issues seems to get more engagement, although maybe not necessarily on TikTok. That one can be, you know, once a week. It doesn't have to be a huge issue. I don't have to worry about that one too much. So I'm going to put it down here. The tech, though, the thing with the tech is there is like way more money available in that, you know? Like people send devices to review. Those videos always do really well despite it not, you know, being completely different content from the rest of the channel. The tech stuff is a major factor. I think I'm still going to put it down here. This one can be either like make second channel or tech. That's what I'm going to say. All right. Because like on TikTok, like, could there be some advantages to talking about the tech and like affiliate opportunities there? Yeah, but like right now, I don't see them. Like the tech that I see on TikTok is like products that I think I would know a lot about that you know, people would like to see me talk about. It's kind of iffy. So this can be like a small side project, right? Oh yeah, the other thing up here is programming. So I really think that on TikTok, I should focus on these main ones. Okay, so now I got to drive it up. Split it up. Ninja Trader, indicators, building own platform. Okay. On order flow, what are the main takeaways here? Or should I just call it general? Well, there's general day trading advice, and then there's like strategy advice, and there's like personal advice, right? Trading. Number one, the informed trader. 2, try to predict orders. What else do we got there? I feel like that there's another major Square root law. Can we put it that way? I think one of the issues that I have is that these things that I think are like the most important for you to learn about trading that are going to help you the most don't necessarily lend you to, oh, so you should buy my indicators. I mean, they help you. But really what I'm saying is you need to be getting the information. That's why I keep switching to this discussing current market headlines, right? Because ultimately what I can tell you about that is probably more valuable to you than the things that I've taught you about order flow. Do you guys feel that way? What do you think is more valuable? The content that I've given you, like just from being here on stream every day, which part of the content do you think is more valuable? Talking about the current forces in the market and the headlines and the economics, or understanding the market microstructure? So I really feel like understanding the market microstructure really gets you to, you should pay attention to this. And then once you have this, then this is a good augment to you. But really, I should be focused on giving you this. I think that if I were to focus more on this, that the answer there would be starting a Substack and discussing those things on Substack more, and, you know, using the TikTok to direct more people to the Substack. Because then you see my issue. Really. So here I'm sitting talking about, well, I would really like to get more into activist investing too. But where does that fit in with all of this other crazy stuff that you got? You're just too spread out, Seth. And where should I really be focused? And I want to say, okay, well, let's make a Substack and then like gear all of the content towards directing people to the Substack. But that's like a completely different stack. Like it doesn't really synergize with the existing content as much. So is it just the case that the existing content wasn't really, well, maybe it was just necessary as part of the evolution. Understand, you know, the things that are actually going to help you. And then, you know, realizing that it is really that information about the market that's going to help you the most. So I should focus on giving people that more, even though I have really good order flow content. I think that makes the sense strategically from that perspective, but I don't think that that's actually the way that you're supposed to go and do it. I think that you're really supposed to go like, what is going to attract your audience? What does your audience want? Yeah. So we still need to talk about these things up here, because these things up here are how we get people interested in this down here. That's the funnel. The funnel is you're having trouble trading. Here's why or order flow and complexity explain why trading is so hard. suggests you should look for informational efficiencies. Suggests there's more edge. Suggests that there's more available edge in informational asymmetry. Ergo, read my Substack. And having a Substack would also probably help doing activist investing, wouldn't it? But when we're talking up here, that is like, yeah, you should use my ninja. If you're going to trade, you should use my indicator. I think that sometimes I turn into like, I got to be like pushing the indicators really hard, you know? But no, I don't think that that's right. I think that there is definitely some value in the indicators, but that I should be focusing on in my content on just trying to provide as much value to people as I can. And the indicators are there and we'll talk about them, but people will naturally move to those. It makes sense for them. So now I think I want to try and craft a prompt here. We got time, right? Oh yeah. I was thinking about, do I need to get the kids to school? But Asher was really quiet yesterday, which means probably sick. So. So I'm writing this in a markdown document because you will want to adjust the prompt as you see how the LLM responds to it, to get a better response. So I'm going to save it. This is kind of a little bit like rambly and maybe too heartfelt, but as we see what it says, we'll probably change it, right? So let's see what ChatGPT thinks about this. Okay, so first of all, it did not think hard about that, so that's the first. Think hard. It gave me an immediate response, which kind of says to me that it's not using the deeper models. Like, the key now is to choose a unifying idea that ties together what you already do while also clearly signaling to new viewers why they should follow you. Let's go step by step. Yeah, I think that is the issue. Is that I think that, like, those of you that are here every day, you totally understand that, right? Because you have that whole picture, but I don't have to do a very good job of, like, in one video helping somebody understand why they should, you know? Let's see, what does it say here? Your edge is that you're not another price action or get rich trading guru. You're trying to get traders to understand that markets are not informationally efficient and that order flow reveals where informed traders are acting. That's your foundation. So your identity should be something like, I show traders how to think like institutions by understanding how information and orders actually move the market. Okay. That phrase bridges everything that you do: complexity economics, order flow, economic releases, indicators, platform, etc. Do you guys agree with that? Okay. I feel like that maybe that's too simple, and I feel like maybe it's leading me here because well, I don't know, maybe not. I guess that thing though does lead to, you should follow me to hear my analysis of the economic data, for instance. Hey, Paul's got to go. All right, well, come on. Got to go in 10 minutes anyways. Pick one content focus per platform. Each platform should play a specific strategy role, not just be cross-posts. YouTube, this is the deep focus. How information moves markets, why the market moved. Educational demonstration storytelling. YouTube converts to trust and sales. Okay. TikTok, fast hooks and ideas. TikTok's role is not to teach deeply, it's to spark interest and send people to YouTube. So focused around short, repeated thematic series built around your core identity. Oh wow, it's giving me like a ton of ideas for TikTok videos. Information move markets. This is what. Okay. See, this stuff is just kind of it giving me broad, these are videos that might do well on TikTok and don't necessarily answer the key question. Okay, align your monetization funnel. You have 3 separate value ladders: indicators, affiliate links, and your feature platform. I feel disconnected because they serve different narratives. Okay. You have to decide between being a trading educator or influencer or becoming a markets focused thought leader. Both can work, but trying to do both at once usually fails because they attract very different audiences and reward systems. Oh, wait a second. I think that makes a lot of sense to me. That like the issue is I want to talk about or at least I think that what will help you the most is talking about the things that we talk about here on this stream. But the people that are attracted to that are the people that are interested in reading Zero Hedge and CNBC and discussing that sort of stuff. And that is a different audience from the people that want to day trade. And the people that want to day trade, they just want to do indicators, right? So, and up until now, most of my funnel is really on attracting the day traders, because the thing that was successful first was the stream where we live trade. Biggest risk is building 3 half funnels instead of one strong one. Yeah, if you choose to add a Substack, make it a core product, not an extra. I like that. I don't know why if that. Okay. I tell you what, ChatGPT just does some of the things that I just can't explain sometimes. So like, how did it come up with markets make sense with speculator Seth? From a strategic perspective, I don't know why, because I think it's saying that is like what you would call the Substack, or that would be the theme of the Substack or something. And I don't know how from a strategic perspective that makes sense, but it must know that I'm going to like that. Because the thing that I think I can really give you is like, I can't guarantee that you take all of this information together and then you make a trade on it, that the trade is always going to win. There's a lot of randomness to the markets anyways, so a lot of the time you are going to lose. And there is some question, about how effective you can truly be with it, even after you have like every edge that you possibly can. You could still fail. But at least you'll understand what's going on. And ChatGPT somehow picked up on that. Evaluate alignment with your future ambitions. Hmm. Uh, what did it call the two paths? Right now, I'm probably more on the... Okay, see, because I said think, now it's thinking. Great, you gave me the exact trade-off we need to evaluate. Keep leaning into the educator's tools platform path that you already know, or pivot towards market commentary, thought leadership, activism, influence. You want the option that gives the most clear near-term path to reliable income, so you can go full-time. Below is a tight critical analysis and a concrete plan you can run as a real experiment. No hand-waving. Ah, I like that. That's something that I should remember is like, have it. We'd always want to like have a way of verifying things. Like the issue, part of the issue is I want to like, what content should I make? Well, what we can do is we can make different types of content and see which ones work well. And if we design it as an experiment, we can actually get the real, you know, and that the same thing goes with like technical decisions. It's like, you know, build proof of concepts and test them. Short verdict. Don't fully abandon the educator platform path yet. Pivot, not replace it. Run a 90-day experiment that centers the existing strengths. Go building a Substack funnel to monetize higher value recurring income. If that experiment shows better economics and audience fit, then tilt more hard towards the Substack thought leader route. Why? You already have trust in live audience converts into sporadic sales. The faster way to sustain it is to convert that trust to recurring revenue through subscriptions, paid cohort, software as a service, which you can accomplish by treating the Substack as a product funnel and not just another channel. Okay, so it's getting the pros and cons correct. Is the Substack market thought leader smaller? That's its big con. I don't know if that's true or not, but okay. Convert live viewers into 200 paying subscribers, members across offerings. If I could get 200 paying subscribers to my Substack, that would be amazing, but I don't think that I would come anywhere close. We can also put it into the Discord. One thing is like you can be paying on Discord or you can be paying on Substack. Actually, no, because the Substack, I don't know, how much should I charge for a Substack? 20 bucks a month? Discord 10 to 20. Well, we can add another tier onto the Discord, right? That if you're paying for $20. And then similarly, if you're on the Substack, give you free access to the paid Discord. Close each stream with a single clear CTA free Substack. Okay, so what it's not saying you should, you know, the Substack is the way. It's just saying run the experiment. Fine. We're in a good spot with the platform to focus on that. Conversion is strong. Double down, higher help, shift more content to the subscription funnel. If the subscription is weak, analyze the drop off and either iterate on the messaging or consider deeper pivot. You know, I think that one of the things that's always held me back from doing the Substack one time, but I don't think that's so much an issue right now. But maybe there's also a little bit of imposter syndrome there. Like, can I really provide enough value from the Substack to justify paying $20 a month? But then I think, you know what, though? Like, people pay $20 a month for, like, way worse content. Content that doesn't help them whatsoever. So I shouldn't keep that from stopping me, because I really do think that I have valuable stuff to share. I really do. That's the thing that frustrates me about it, is that it's not just like, oh, I've been here a long time, I've been doing this stuff, and I've had some success, but it hasn't led to the lasting, like, you know, doing it full time sort of a thing. And And that kind of bothers me, sure. But what really bothers me is that I have a profound message that I think makes a big difference to the world that is just being ignored. And we need to get it out there. And I don't even think that it's like, oh, everybody's... Sometimes I think, or I feel like it's that people just don't want to hear it. But I'm not actually sure if that's true, because the reality is that probably most people have just not heard it. Just most people have just not heard it, or they heard it, they didn't really completely understand what I was talking about. You know? So we should do it. And I do like this thing where on YouTube it says long form evergreen lessons, like order flow lessons, step-by-step indicator walkthroughs, funnel viewers to Discord and cohort. And I also think there we can put like the general trader lifestyle tips sort of stuff too. But if I focus the TikTok more on pointing people to the Substack, yeah, we'll talk about order flow, but primarily as a, like this does kind of suggest that you need to know what's going on, right? Okay, so the short-term goal is current short-term goal. Create a Substack and funnel Substack. Which means the funnel should be this. Boom. Okay. Wow. We'll talk about this tomorrow. Earlier in the session. Looks like the treasuries, they maybe pushed up a little bit more. I don't know. Like, I really feel like 04.5 would be really far away, but we've got some Fed speakers later, so maybe that could do it. Maybe Fed speakers later could do it. But currently, I think 113 is going to, once again, kind of keep things stuck. So that's where we are for today, guys. Thank you for putting up with me today. I will see you tomorrow. Stay excellent.